partnership interest in days within the tax year that interest was owned. What happens in practice then is that the 1065 is prepared, but it's only for reporting purposes. And that 1065 partnership income or loss then is allocated to the shareholders. What I might mention to you folks is that not every item of income, gain, loss, and deductions are aggregated for that purpose. There are some items that are what we call separately stated items, impacting partners differentially, e.g. a capital loss. I mean, if I lump the capital loss in as part of the partnership income or loss, it would lose its character. And as it was farmed out then to the partners, if they had other capital transactions, they'd not be able to use it. Pick up that information and put it on each of their 1040s. Partnership entity, by the way, is called a flow-through entity, and Deb knew that. Okay. In addition to the partnership then, there are two different kinds of corporations that your text introduces to you. For tax purposes, what's the impact if you're a C?
You can be double taxed.
There you go. There you go. That's what I was looking for, the double tax impact. That's part of the tax.
It's reported on your Form 1120. And then you can get those shareholders, once they're paid dividends, can get taxed again on their own personal income.
Absolutely. That's the burden of double taxation that's part of the scheme. Past that, you can elect an S if you meet the criterion, of course, and we'll talk about that in a later chapter. What's an S corporation? What's an S? Do you remember reading about it? Right, an S corporation is, but because it meets certain criteria, it's able to be treated like a partnership for tax purposes, at least very much like a partnership. S corporation income or loss computed, and then it's allocated among the shareholders depending on their ownership interest in the days they held it. And just like the partnership, in fact, the provision is identical. There are certain items that have to be separately stated and flow through, retaining their characteristics, come tax implications there. And likewise for trust, you may establish trust. We'll talk a little bit more about that in a second. But we're going to put off that discussion until later on in the semester. So we have those four business forms, and of course this chapter is zeroing in on characteristics include what? What are some of the non-tax characteristics, the ones that you're already familiar with from a corporation? Right, centralized management.
Continuity of life.
Yeah, continuity of life, unless the charter goes in saying we only want a 10-year life or 15 or whatever, is an indefinite life. What else? What's one of the main advantages of the corporate form?
Unlimited liability.
Or limited liability. Very easy, there you go. Normally, now that's not true if you're talking about a closely held corporation, because typically there are provisions that prevent those shares from being sold, for instance, to outside parties, aside from the family, and that kind of thing. But generally, there is an ease in transferring the ownership. And can you think of anything else? Those are typically the four that are mentioned. Now, as far as taxation is concerned, what might be some things you consider if you're trying to decide whether you want to operate as a C or not? Rate, the marginal rate, yeah. At some points in time, depending on how much taxable income you have, the income tax brackets could be more beneficial from a C than you would find for individuals. We know the highest rate for individuals is what? 39.6, and for corporations it's what? 35, and then there's some surtax that can drive it up over some parts of your income to 38, but basically 35, so there could be some benefit. What about what Brandon mentioned a minute ago?
What was that, Randy?
What's the tax scheme? What's the tax scheme for a city?
Oh, they're susceptible to double
Double
taxation.
taxation, yeah, and you have to. What some closer held corporations do, folks, is to organize as possible in salaries to the shareholders / employees, or in rent payments by renting equipment or machinery from them, or in interest payments by borrowing money from them.